So today we are going to talk about candlestick confluences, which means I want to have identical candlesticks on different time frames to give me a better sign that the market will go in the same direction where I think the market is heading. So instead of looking for trend lines or other signs, I want here now to have similar candlesticks so I make sure that the market will go into my direction. So here now in front of me is the USD Canadian dollar, and what I can see here is the market forming here a bit of a consolidation pattern where the market is simply going to the side. After here we had this huge momentum, this bullish move, suddenly the market here going sideways. So here I'm looking for the market to break and give me some sort of sign that the market will suddenly go to the downside. So now if I add the EMAs just to be sure where the market is going, and here I can see the market breaking the 200 EMA right around here, and here was the last low of this support area where we saw here a couple of bounces to the upside. Here again was the first support line, and here this whole area, and here I can see this huge candlestick again fully engulfing at the end, breaking the last low, and here even breaking the structure on the left side, so right around here. So here we broke, and then he had a little bit of a consolidation pattern here as well, but here initially the second engulfing candlestick was formed right below the lows of this support resistance area. So here I was hoping that the market will continue to the downside. Again, I didn't have here this time a trend line where the market goes to the downside. Here I had just a consolidation pattern where we got rejected once, twice, 3 times, 4 times, and if we take the whole area, even 5, 6, 7 times. So here I was looking for a completely different setup than the trend line. I was looking for confirmation on candlesticks, meaning I wanted to have a couple of fully closed engulfing candlesticks to the downside on different time frames to enter my trade. And so my take profit would have been here, the next support and resistance area right around here. And now if I exit and go to the 5-minute chart, so here now this is the 5-minute chart, and I can see here was the structure break. On the 5-minute chart we had here this fully engulfing candlestick breaking below the 200 EMA. So again I have another confirmation here based on candlesticks that the market will go to the downside, and here followed by a second fully engulfing candlestick. So I was looking here for the market to go to the downside, and now what I want is at least to have 3 confirmations. If I have more than 3, it's even better. So I'm looking now for confluences on another time frame, because here this is my second one on the 5-minute chart. My first one was on the 3-minute chart. So now going to the 50-minute chart, and here now on the 50-minute chart again I can see this fully engulfing candlestick breaking the 50 EMA. So here I can assume that the market will go to the downside just slightly, doesn't have to go and break the 200 EMA. Again, my first target was here, this structure right around here. And again, we are trading on the 3-minute chart. This is just my confluence on the 3rd time frame to make sure that the market is bearish for a short amount of time. And here on the 50-minute chart, I had my 3rd confirmation, my 3rd confluence based on candlesticks, a fully engulfing red candlesticks. And to be more sure or more precise for my entry, that it works out even better, I want to have more than 3 confluences. So I maybe even check the 1-hour chart here. And here, if I check the 1-hour chart, even on the 1-hour chart, I had this fully engulfing candlestick right here at this support area, which is here, breaking this area. So my target here, the next support resistance area. So I have now my confluences based off of the candlesticks on multiple time frames. So instead of a trend line this time, I'm looking for candlesticks. So now I'm going back to the 3-minute chart, and here again with this break we have on the 3-minute chart a fully engulfing candlestick, a bearish one. On the 5-minute chart we had one breaking this area, on the 15-minute chart, and even on the 1-hour chart, all of them breaking here this structure. So my next structure target will be here, this structure. So here again followed by another engulfing candlestick, and then I saw the market here pushing to the upside, but here not breaking this area, so my entry was right around here, somewhere at the end of the candlestick. And we can see if we add the RSI, here right at this candlestick, the RSI broke even the 30 levels, so we are completely below the middle line, below the 50 levels, so I can assume the market is bearish. And if I add the MACD, here I can see with this red candlestick the market here previously been pretty bearish below the zero levels, here red structure being formed. So my entry is here at the 3-minute chart at this candlestick, and again my target somewhere at the previous structure right around here. And now if we let the market run here, and here my target here at this point at the top of the structure, roughly at 2.5 risk reward. If I would have targeted the lows right around here, could have been a 3 to 1 or 1 to 3 risk reward ratio. But initially this was the trade on the candlestick confluences right here. We go from the lower time frames to the bigger time frames this time. So this was the video of today and the new strategy with confluences of the same candlestick from bigger to lower time frames, or from lower time frames to bigger time frames. So hope you guys enjoyed it, and see you next time.